everyone. Isco here. Hope you're all doing well. So I wanted to cover something, which is something that I really feel like there's not a lot of information on, and that is the difference between an A lender, a B lender, and a private lender. So I want to talk a little bit about how they land, what they're looking for in borrowers, and why they would be a good fit for some, not a good fit for others. So a lot of people are under the assumption that if it's not a bank, it's a private lender or a B lender. That's not how it works. B lenders have certain lending criteria and they target a specific segment of the Canadian market. Privates have their own, and A lenders have their own. There are a lot of A lenders in Canada, and just because you can't get approved at your bank does not mean you can't get an A lender to approve you. These A lenders are massive companies. Some, like First National, even underwrite for TD. That's how big they are. So they are companies who want a part of the Canadian real estate market or Canadian mortgage market, but don't want to have branches and that overhead. So they transfer some of those savings to the borrower, and they have their own unique set of lending criteria. So lots of A lenders, they're great, they're regulated, great products, great rates, great lending practices. I myself, I'm with a monoline lender, A lender, but not a bank. My name is Isco, mortgage broker here in Ottawa, but we service the entire country. So I'm going to be walking you through the different types of lending that is available to borrowers in Canada. So let's start off with A lenders. What are A lenders? So all the chartered banks and the large banks in Canada that you're familiar with, that you can walk into their branch, are A lenders. Now there are a lot of what's called monoline lenders. Monoline meaning they lend in just mortgages. Also A lenders, excellent rates, all that good stuff. And then you have your credit unions. So lots of different A lenders. Now, they each have so many different programs. I can't possibly cover them all in one video, but this is typically what they're looking for. They're looking for verifiable income, meaning you have a 2-year T4 average or a guaranteed salary letter of employment. Or if you're self-employed, you have 2 years of personal tax filings and your income taxes are up to date. They're looking for a clean file. Credit score typically has to be above 600, okay? And you have to be within their ratios. They are a little more strict than your B lenders and certainly more strict than the private lenders. But typically they're looking for regular clean file. Now, they have a lot of different niche programs. So sometimes if you don't have enough income, but you have a high net worth, you can go with them, or you have your loan to value is very low. So there's a lot of little niche programs that we can get you with an A lender, even if you have a very unique situation. But in short, they want verifiable income, income enough to service the mortgage, and clean credit profile. So now I'm going to just show you what an A lender option looks like. It's not going to be purchase or refinance specific, but it'll just give you an understanding of what an A lender option looks like. Let's say you bought a house for $700,000, you put $200,000. Your total mortgage that you need is $500,000. Your monthly payment would be $2,431.65, and that's based on a 3-year fixed rate at 4.19% on a 30-year amortization. If it's a purchase, you'll have closing costs. We build that into it. If it's a refinance, we give you a breakdown of the debt payouts, equity takeout, and so on. But this is just for information so you can get an understanding of what an A option is and looks like. For A lenders, if you're looking to make a purchase, the minimum down payment is only 5% down. So 5% of the purchase price to access an A lender. So a lot of times people want to go with an A lender, of course, because going with an A lender means there are no lender fees, there are no broker fees, and you are getting the most competitive rates in the market. Assuming somebody has excellent credit or good credit, one of the things that can stop them from accessing an A lender is usually their income. So if they're self-employed, it means they haven't declared enough or they haven't paid their income taxes, they're not up to date. Or if they simply have started a new job where they're, working 60 hours a week, they're getting that money, but it's not, the employer does not want to write that they're guaranteed this income and they don't have a 2-year average. So there's situations like that where even if you have great credit and you make enough income, but just how your income is being reported, it doesn't give you, it doesn't meet lender requirements on the A side. And because of that, you have great options available with B lenders. Now let's talk about B lenders. B lending is one of my personal favorites, and the reason that I like it is because you are getting a good product, relatively speaking, and there are a lot of different unique and niche programs available. They are much more flexible when it comes to the mortgage amounts, so you can get a lot more mortgage with a B lender. And they are also much more flexible when it comes to the credit score. Some lenders don't have a minimum credit score requirement, but let's say 500, and you can get a mortgage through a B lender. Now, there are two types of clients that will access B lenders. There are clients who are just going to be with a B lender for maybe 1, 2, 3 years until their financial situation improves. Or there are going to be some that will be with a B lender for their entire life. The ones that are going to be with a B lender for their entire life, or for the unforeseeable future, for example, are those who are self-employed. So there are people who own businesses. They generate a lot of revenue, or good enough, or a decent amount of revenue, but they have very aggressive tax planning and they just don't declare enough income. So think about the landscaper who brings in 15, or snow removal specialist who brings in 15 grand a month, but only declares 10 grand a year on their taxes. And oftentimes, their tax strategy is going to remain the same. And so they're not usually going to be able to make it on the A side unless, they show really solid corporate financials and they access some niche products that are available to get them to the A space. But usually, from my experience, I've seen a lot of these people just stay with B lenders. What they're thinking is, okay, you know what? I'll pay a little bit more on the interest rate, but I'm going to save thousands of dollars on my income taxes. So they stay with B lenders. The other people who are, sometimes will stay with B lenders for a short period of time are people who have poor credit. So somebody that has, let's say, a 500 credit score, 520 credit score, they have a lot of debt, a lot of unpaid collections. They'll refinance with a B lender, pay off all of that debt, and then, in a span of 1 or 2 years, their credit score will have improved, and now we can move them over to an A lender. So that's another segment of the market as well. They also do a lot of very interesting things. So, for example, if you have a line of credit, right, they will service that debt at the interest only payment, whereas A lenders won't. So let's say you have a $50,000 line of credit and you're paying $300 a month as your minimum payment. These lenders will only use $300 a month when calculating your total ratios, whereas an A lender would take 3% of the outstanding balance, so $1,500, and put that in your ratio. So you can see how much of an impact that makes. That's one thing. Number two, income taxes. They don't have to be up to date in some situations to access a B lender. Things like child support, spousal support. Some lenders will deduct it from your income as opposed to adding it as a liability. This, again, gives you additional borrowing power. They'll do things like contributory income. So let's say you have an adult child or a spouse that's living in your house that's earning some income, but they're not on the mortgage. So they're not on the mortgage, they're not on the title. They will use things like contributory income. So they'll add about, thousands, $1,200 a month into your income to help you qualify because they know there's an adult in the house. Maybe they're sharing in some of the expenses. They'll do things like use border income. Maybe you're renting out a room, right? You can't, an A lender won't consider border income. Some B lenders will, and so there's a lot of different, I could whole day about this. This is really what we specialize in these more technical files, but B lenders are a great option for a lot of Canadians. One last thing. So B lenders will, cater to those that are employed, T4 income, regular income, but they're great with self-employed income. So they're going to use reasonability. And one of the reasons that we work with so many self-employed individuals is because they can provide us 12 months, 6 to 12 months of business bank statements. We calculate, we annualize their revenue, we deduct their expenses, and then we use that as their personal income. And we do annualization of business bank statements. reasonability allows us to say, you know what, this person is actually bringing a lot of money. Their income is much higher than what they've declared on their personal taxes, and then they can go ahead and go with a B lender. If you've gone to the bank and they've said no, you come to us. We try to get it done with many other A lenders that we have. But if not, then B lender is a great solution. It can be a short-term solution. It can be a long-term solution. It all depends on the type of borrower that you are and your financial situation. But great programs, and we specialize in B lending. This is really our bread and butter. So let's look at a B lender option that we would send. Again, it's not refinance or purchase specific, but this will just give you a good understanding of what it looks like. And we're working with the same figures as in the A deal, and we'll do the same thing for the private. So you bought a house for 700,000, you're putting down 200,000, so you're financing 500K. Okay. On that 500,000, there's going to be a 1% lender fee. So that's $5,000. Okay. Now that's standard. All B lenders are going to charge 1% of the total financed as a lender fee. They charge it once, and it's when you secure the original mortgage. They will not charge that on renewal. Some of them have a no fee option, but it just means that the fee is built into the interest rate. So your interest rate would be higher, but there wouldn't be a fee. So it's really a case of, do you want to pay the fee up front, or do you want it built into your rate? You choose, but they're going to charge that 1%. Broker fee, this can range from 0.50% of the total financed to 1% of the total finance, depending on the mortgage. And the reason is that these are much more technical mortgages, much more labor intensive. Not a lot of brokers understand even how to do them properly. And also the compensation. The B lenders do not compensate the same amount as the A lenders, so we have to get paid for our work. So there's a fee there, and then there's a monthly payment of $2,665.47 based on a 3-year fixed term at 4.99%, 30-year amortization. So if you put the fee aside, you can see that the rate is pretty close. So B lenders are not these crazy high rates. And for some people, they actually make sense to go with a B lender because it means they're saving more on income taxes than the cost, the additional cost of borrowing. So this is a B lender option. So if you want to access a B lender, you have to put 20% down or be at 80% loan to value or lower to access a B lender. You cannot get a B lender with 5% down, 10% down. Private lenders. Okay, now there are a lot of different private lenders in the market. There are individuals, then there are large mix, which are mortgage investment corps. So I'm not going to really get into the different types of privates for now, just to keep it simple. But private lenders are going to give you the most flexible guidelines. So they're not really looking at your income too much, but they are looking at affordability. There's a difference, right? So what they want to know is, how are you going to make this monthly payment? So they're not going to necessarily look at your personal income, but they'll want to know where the money's coming from. Maybe you have a family abroad. Maybe you have an inheritance that you're coming into. Maybe there's different things. So how are you going to make the payments? So we're going to cover that. Number 2, they really are looking for the exit strategy. This is the most important thing for private lenders, is exit strategy. And frankly, if your broker, is not talking about your exit strategy and is proposing a private lender, run away from that broker. You have to have an exit strategy in place. Private lenders are short-term solutions. They're not something you want to keep for more than 1, maximum 2 years. Private lenders will do a lot of interesting things. So they don't have a minimum credit score, but what they're looking for is equity. So to access a private lender, you need to have, if it's a purchase, minimum 20% down, but usually 25% down. Or if you're refinancing, you cannot exceed 80% loan to value. And in most situations, especially in today's market, 75% loan to value. They're not very document intensive. So prove that you have the money down, show how you're going to make the payments. What's your exit strategy? So after a year, how are they going to get their money back? This is what they want to know. So maybe you're going to finish the renovations and you're going to sell the home. Maybe you have another home that's for sale and it should be sold by then. Maybe by accessing a private lender, you've fixed up your credit enough, and then now maybe you can access a B lender or even an A lender to refinance and get it and move away from the private. But it's super important to figure out what the exit strategy is, because on a private lender, you're paying, in most situations, interest only. So your payments are not going towards the principal, and you are paying lender fees when you secure the original mortgage, but you're also paying lender fees on renewal. So it's not something you want to keep for a long time, but it will just help you get to where you need to go. There are multiple types of people to access private lenders, but it's really for unique situations. So if you cannot get an A lender, if you cannot get a B lender, private is the way to go. It's very important to do your research and make sure you're working with a broker who's familiar in this space. It's the largest financial transaction you're going to make. You want to know, you want to speak to a broker that does a lot of volume with B lending, private lending, just in volume in general. So that way you're getting the right advice. Look, I can't tell you how many times I've had somebody come in who's with a private lender and I go, why are you with a private? Oh, I don't know. The broker just put me there. Yeah, I put you there just because it's sign and go. But you could have been with a B lender, right? So a lot of brokers are not experienced with private lending. They're not experienced with B lending. They usually have some of their few A lenders that they work with, and that's pretty much it. So you really want to work with a professional who's familiar with this space, because oftentimes it can mean thousands of dollars in savings. So private deal. Now they're all going to vary. Fees are going to vary because they're very much private lenders are a little different. It's very much case specific. So it's hard for somebody to give you accurate pricing without actually speaking to a lender and working on your exact. But this will give you a really good understanding of what a private breakdown looks like. So let's say $700,000 purchase price. You put a down payment of 200,000. Lender fee. So you're borrowing 500,000 again, same as the first two options. So lender fee. $10,000. So 2% of the total finance. Sometimes it's less, sometimes it's more. This is just a rough estimate. And then broker fee, $5,000. So 1% of the total finance. It can be sometimes a little bit higher, it could be a little bit lower, but again, good gives you a good understanding. And then there's a lender legal fee. So a lot of lenders will charge a legal fee. So the cost for their lawyer to prepare the paperwork is charged to the borrower. And monthly payment is $3,537 and 50 cents based on an interest only payment. So nothing is getting paid down. There is no amortization. Interest only payment of 8.49%. So this is what a private lender breakdown looks like in most situations. And so the reason that the broker fee is often charged, or in most situations, is because the private lenders do not pay the broker for arranging a private mortgage. So the broker has to charge for their services. But again, you want to make sure you're getting good pricing on this. Just because you're in a situation where you need to access a private lender doesn't mean that you should be price gouged or taken advantage of. Our philosophy is we're happy to make a little bit of money on a lot of transactions, because it's the right thing to do and it leads to more referral business than, making a lot of money on a small amount of transactions. For us, good businesses will make a little bit of money and we'll do it on a lot of transactions. We'll have a higher volume and more referrals. That's just how we do it. Every broker is a little different. So in short, there are three categories for mortgage financing in Canada: A lenders, B lenders, and private lenders. So if your bank has told you no, there are lots of other solutions. And, this is a whole other video, but I recommend working with a mortgage broker. Like, for example, in our office, we are registered with Scotiabank, TD Bank, BMO, National Bank, Desjardins, the major banks that you're familiar with. But then we have a lot of different credit unions and different financial institutions that are also A lenders. So if we can't find you a solution at one A lender, we have another A lender and we continue. A lenders, no lender fees, no broker fees, market competitive interest rates, long-term solutions, not as flexible in most situations as B or privates, but better for you financially. So what are you? Are you an A client, B client, or a private client? Call us, reach out to us, free consultation, and we'll let you exactly know where you stand. You might think you need a private lender, but there's a great option for you with a B lender. You might think you need a B lender, but there might be a great option for you with an A lender. Look, we've got 240 lenders. Each lender has 10 programs. Do the math. That's 2,400 solutions. There are lots of ways to secure an excellent mortgage, but you really have to work with an office that does a lot of volume and does a lot of different volume. So we do a lot of A business, we do a lot of B business, and we do a decent amount of private business. So We'll be happy to chat and put your option together for you so you know exactly where you stand. Please click like and subscribe when you have a minute. Thank you.